Hi, I'm John Lockwood, advisor at Genovese Burford and Brothers, and I have Keith Glenn, CPA, with us here today from Gilbert and Associates. And today we're going to talk about annuities, buyer beware. Now, I'm not saying that annuities are inherently bad, but for the right person, it could be a good fit. However, many people buy an annuity and then years later realize that that product no longer meets their needs. So Keith, tell us about what your options are if you need to pivot from an annuity.
Sure, John. There are really three ways to exit an annuity. The first is to surrender the annuity entirely. Another option is to withdraw a portion of the account value. And a third option is to exchange the annuity for another financial product.
Okay, well, let's talk about waving the white flag and asking for all your money back. How does that work from a tax perspective?
Sure. So surrendering annuity is essentially canceling the annuity and asking for your entire account value back. From a tax perspective, this can be pretty costly because you're subject to ordinary income tax rates on any appreciation in the account. In addition, there are some surrender charges that could apply and also an early withdrawal penalty.
Okay, so let's talk about another option then. How about if you just slowly drain the assets out of the account? How does that work from a tax perspective?
So most of the time, any payments from an annuity that are not part of the regularly scheduled payment annuity stream are subject to ordinary tax rates, plus they also could be subject to an early withdrawal penalty as well.
Okay, so maybe not all the whole tax bite at once, but you're still going to get taxed every year. Now, what about the third option you mentioned of an exchange? How does that work?
Sure, certain annuities can be exchanged for other annuities or maybe a long-term care policy as your financial insurance needs have changed, and the IRS allows that to be done tax-free. It is the most tax-advantaged way to exit an annuity, but you really need to use caution and consult with your tax professional and your advisor to make sure that it's done correctly.
Okay, so if you find yourself in a situation to where you may need to review the policy to make sure that it's still meeting your needs, one, consult with your advisors, but if you need to pivot, make sure that you talk about what your options are before making any decisions. Great. So if you have any additional questions, please feel free to give us a call or stop by the office, and we look forward to seeing you soon. Thanks, Keith.
Thank you.